Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. Today we're re-diving into Equillium Incorporated's latest 8K report, and let's just say it involves a bit more fundraising. Before we jump in, if you love getting the real scoop on companies, make sure you are subscribed, and hey, we've got a fantastic community building over on Discord. The link is in the description, come join the conversation there too. This filing is all about Equillium's plan to raise a significant amount of money through selling more of their stock. It's essentially an update on their ongoing sales agreement, promising up to $75 million. Alright, so Equillium has this sales agreement originally dating back to late 2023, and it was a bit tweaked recently in August of 2025. This agreement is with a company called LifeSci Capital LLC, and it is their ticket to selling shares of Equillium's common stock in the open market. Think of it as a flexible way to raise cash as needed. This whole process is happening under a specific registration statement with the SEC, which is basically permission to offer and sell these stocks. It shows they are playing by the rulebook, but also that they're actively looking to get more funds into the company. Now, what they V-filed is called a prospectus supplement. This document isn't a standalone entity. It is meant to update or add to an existing prospectus, which they recalling the ATM prospectus. You really need to look at both together to get the full picture. It is like adding a new chapter to a book that might change some of the older story. The company has already used this agreement, having sold shares before this supplement. They V-sold quite a few shares, over 1.7 million to be exact, and raised nearly $1 million from those previous sales. This new filing is about pushing that fundraising goal much higher, aiming for up to $75 million. Let's talk about what they're reselling, shares of their common stock. Each share has a really tiny stated value, just $0.001, meaning the real value and price is determined by what people are willing to pay for it in the market. And where are these shares traded? On the Nasdaq Capital Market. This is a particular segment of the Nasdaq Stock Exchange. Often for smaller companies, being listed here means they have to meet certain requirements, and it gives investors a place to buy and sell their shares. Now, let's consider the bigger picture here. Why would a company like Equillium be looking to raise such a substantial amount of cash through selling stock? Typically, companies do this to fund research and development, expand operations, pay down debt, or perhaps make acquisitions. Given Equillium is in the biotechnology space, it's highly likely this funding is for advancing their pipeline of drug candidates, which often requires significant investment over long periods. The fact that they are using an open market sale agreement and updating it to allow for a much larger amount suggests they want to be flexible and capitalize on market conditions to sell shares when prices are favorable. This is often referred to as an at-the-market or ATM offering. It allows them to sell shares periodically without a big splashy announcement each time, and generally at prevailing market prices, which can dilute the ownership of existing shareholders, but provides essential capital. They've also included an opinion from a law firm, Cooley LLP. This is standard procedure in these types of filings. It is basically a legal confirmation that the shares they plan to issue are valid and legally sound. It is like getting a lawyer's stamp of approval on the legality of the upcoming stock sales. And signing off on this, we have Bruce D. Steele, the President and Chief Executive Officer of Equillium Inc. His signature confirms the company is officially making these statements to the SEC. So let's break down what this really means. Equillium is raising capital, and they're doing it by selling more of the company. This can be a good thing if the money is used wisely to drive growth and innovation, especially in the biotech sector where funding is crucial. However, frequent stock sales can also dilute the value for existing shareholders. It is a balancing act. The market will be watching closely to see how effectively Equillium deploys this new funding. If they can successfully advance their drug development programs, this move could be very positive in the long run. Now, looking at Equillium's direction, their strategy seems to be focused on growth through capital infusion. The use of an ATM facility indicates a need for ongoing funding, typical for biotech firms pushing through clinical trials. The key risks here would be the success of their clinical programs and the fluctuating market conditions for biotech stocks. Opportunities lie in potential breakthroughs and partnerships. In conclusion, this filing signals Equillium's active pursuit of significant funding, likely to fuel their research and development efforts. While the stock sales might dilute existing holdings, the capital infusion is potentially vital for their future growth. Alright, that is our breakdown of Equillium's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.